Okay, finally, here we are, 8:06 a.m. Chicago time, 9:06 Eastern U.S. time. Sorry about the delay. Some issues getting to my office this morning, and then this broadcast software had to update, and it took forever. Apologize for that. This is another Trader Bite. It is Thursday, the 28th of September, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is slightly off of where it left off yesterday. Very interesting action into the close yesterday, or actually into the afternoon. And then the evening, the market seems to have overshot on the indices to the upside. Um, and finishing yesterday, finished above the key level there of 2502, and has come back and is trading currently at 2500. There's a fairly nice base that we touched overnight at 24. 98.50 from yesterday before the impulsive move up at 12 and a quarter points. I'll go over all that. Not sure why I got into the ES already, but right now the markets are looking like they are holding sideways. The indices are mostly down. The Treasury bond is the laggard today, down 19 ticks or 0.39% yields going up, followed by the Nasdaq, which is down 20 points. The leader today is crude oil. November crude is trading at 52.62 currently, or up 0.9 2.94%. A strong up move took place in the 4:30, 4 a.m. Time period, the Chicago time, and the market's holding steady in a flag pattern in crude on a 15-minute chart. So it looks like it's waiting for its continuation higher. The mid for crude for the session is around 52.36. As long as that holds, then 58.286 is likely to go. So what we have this morning is a market that's off of its highs across the board from yesterday. The anomaly is the DAX. The DAX is strong at up 32 points or 0.25% on the indices. As far as what we're looking for today, what the key driver for today was GDP came in strong. Um, let's see, GDP. Where are you, GDP? All right. GDP hits a two-year high on strong business and consumer spending. The other thing that's in play, that's coming into play, is the administration's, the U.S. administration's um, tax plan is about to become a key issue. The plan lowers the corporate rate from 35% to 20%, and drops the individual tax rate to 35% from 39.6% in the U.S. This plan is, as of yet, unfunded. I believe they were seeking 15%, but that was not likely to pass. We'll see if this passes. For those of you who have been in a cave for the last couple of days, the next iteration, the latest iteration of the healthcare bill did not go through and was put on hold yesterday, and is still a struggle for this administration and Congress. So that's where we are. Just keep an eye out on, there's the Trump trade that occurred after the election was heavily based on this tax plan, and the stocks that are tax burdened the most are likely to benefit the most. There's a repatriation holiday for companies like J.P. Morgan and Apple and stuff, and others, to bring their money back into the U.S. for a very low rate, a one-time repatriation or something like that. So the market is likely to respond to this once it becomes more solid. Markets also responded over the last couple of days to Yellen's comments and the fact that she's expecting that rates would continue to rise, which has pushed financials higher. Higher interest rates make more money for financials and for banks. Um, so that's about it. Let's take a look at what we expected yesterday versus what we got. Very very interesting trade yesterday, to say the least. Did not expect the market to drop that far. That was my hypo 4 actually. Um, we played out hypo 4 actually, and just took a big drop. So this did not work out. The expectation was to have an open auction push down into the 98, 99 area, find a base and push out. And that did not happen yesterday. The secondary hypothesis is to push up to 2505, which we did, and then to rotate down to that 98 and hold in the middle, where we're looking for a double distribution profile, like I drew here, which actually happened. Um, but but it went a lot deeper than I had anticipated. So here's what we got. Let's look at it on the 15 minutes just to be consistent with our hypos. So if you look at what we got the push to 25.05 on the dot. See that there, 25.05, right on the dot. And then it pushed way deep. It pushed down into the point of control, which was not anticipated. Remember yesterday I talked about this being a Christmas tree, a half Christmas tree profile. Did not expect it to make it down to the lower high volume node before basing and then pushing back up. We ended up with the double distribution profile as expected, but I was expecting it to be up here, or more like up here, and it had a much wider range than anticipated. So yesterday had 16 points of range, which is uncommon without news, and so hard to predict that. Definitely some whoppers yesterday, especially on this impulsive move. We haven't seen an impulsive move this large in a long time. We had, but it's a classic here: impulse, pullback, very tight pullback, continuation, and then consolidate for a correction lower potentially. We don't see 12 and a quarter point move rotation on a 6-tick pullback. By the way, my trigger chart, the pullback on the zigzag indicator for those who are using IRT has been moved from 7 to 6 for the lower rotation. So now I'm back to 6 ticks on the pullback. So the market has to move a minimum of 1.5 points for it to start a new rotation. And that's what you see there, 1.5. A lot of 1.5s there, 1.5, 1.5, and so on. But we had this impulse. It told us a lot, and currently we're trading at 2,500, so we're trading beneath the mid of yesterday's range, and we're trading inside of Tuesday's range as well as yesterday's. So it puts us in a fairly precarious position as to which side we should be pushing for this morning. It basically is saying that it could go either way. The overnight session, a continuation of the sell-off that we saw on the close, and then it attempted to pull back. We pulled back to about mid of the swing here. This is about the mid right here. And then it continued lower, and it's tackling lows. It's hanging out near lows right now. And so that's where we stand right now as I'm speaking. It looks relatively weak, but given the fact that this market has not held lower in on most days, and also we are still one time framing up, right, on the daily. There's your Monday, there's your Tuesday low, there's your Wednesday low. We're one time framing up on the daily, and we have a higher high, lower low on the week. So we have an engulfing week here. We're still not. Of course, we have to wait till next week to see if we're to finish. Next week has to finish for us to see that we're one-time framing up on the weekly, but we definitely broke the one-time framing up on the weekly, and so we broke it down, and we are neutral, and we're one-time framing up on the daily. So those two different time frames are not jiving together, and it's likely to create some conflict. This morning, my expectations, tough call, uh, but my expectations are for an open auction. Why? Because we are inside of multiple days of range. Okay, so we expect both sides to battle it out. I'm expecting it to push this overnight low, but not by much. I'm looking for this high volume node to come into play. So I'm looking for a push into this 97, 98 for support, and then I'm looking for an impulse up. Okay, so that's an important clue. An impulse up, pull back to about mid or the opening swing high, consolidate for a while, continue higher, and then hold in this range. If we get this kind of movement, we will end up with approximately 10 points of range for the day, and that's my primary hypo. This is very, very likely to happen. We have pushed into this MC point of control that we've left behind from the upper distribution. We've pushed into it, we've tagged it right here, and then we pushed through it and traded both sides, and I'm expecting that to be a magnet again today. And the market keeps making these lows and pushing strong. It makes a low and pushes strong, makes a low and rejects it strong. And so to me, this is a continuation. So high probability hypo 1, this is the side that I'll most likely be trading from this morning. Secondary hypothesis is an open auction that swings up, pushes into 2505, consolidates for a little bit, and then pulls back before it starts to trend back up again. I'm looking for wider swings on hypo 2. On hypo 2, I'm looking for wider swings up and down, so we're likely to see an impulse up and then later an impulse down with a continuation higher. This creates more opportunity than hypo 1, but it's a lot less likely to happen. The tertiary or the third plan or hypothesis is a market that open, test, drive, consolidates, and then fails later in the session, fails back down later into the session and starts to move towards that 97 again. That's the third hypothesis. Today is a good day to just pay attention to what's going on. It's likely to be a mover. I'll leave you with those thoughts, and hopefully, you can walk away with the idea that you need to wait. You need to wait to see what the market does before you step. The goal is not to guess what it's going to do and to catch a 10-point move. The goal is to take enough price risk to see which side is gaining and then play the pullback, right? So it's hard to predict that 12-point move like we had yesterday. It's hard to predict that from happening. It's your job to just see which side is winning and to trade from that side until it fails. And that could mean losing money. And losing money is not such a bad thing as long as it's controlled. Again, like I've been talking about recently in the most recent talks, webinars, aim small, miss small, aim small, miss small. The goal is for you to be here, take the chance, nothing ventured, nothing gained, for you to take the chance every day, but to take small chances and to take many, 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 many chances. Like coin flips, you want to get in as many as possible so that you can reach the true edge that you've developed. Good luck.